Time to pick some stocks. We're going to start with Steve.
Yeah, I'm going with CNH Global. They are one of the largest makers of farm equipment and agriculture equipment. And if you talk about some of the major macro trends that are taking place, certainly a growing world population is going to demand more food. Energy, which is one of the ones we've talked about a great deal over time, and why we so much like energy. But food's got just as good of a trends there, and so CNH, I think, a main player in that. Taking a look at the estimates picture, they had great earnings surprise last time around, estimates flying higher, yet because of all the questions with Europe and so on and worldwide growth, concerns about what might happen in the future. So the stock is greatly depressed versus its true value at 45 or 50. So big fan of it over the next 2, 3, 5 years. Hard to imagine.
That's what I was going to ask. It seemed like play the longer term trend looking
Absolutely.
out.
Yeah.
All right. Shiraz.
Kansas City Southern, one of the best growth stories in the railroad space. North Side franchise, it's grains, it's automobiles, both to the Gulf of Mexico port locations, which is then onward international trade, also onward into Mexico, and there's a huge capital investment coming through in Mexico on the automobiles and also another a bunch of other industrial manufacturing factories, primarily in KSU's catchment area, if you will, so the long-term secular growth picture for KSU is as good as it ever been. Volumes are expanding. They have strong pricing power. They came out strong in Q3, guided higher. Estimates been going up. On top of that, this is one of the best performers in focus list, have done pretty good, and I think the upside is still there.
Yeah, it sounds like rails are still one of the most efficient ways to move freight and commodities.
They do. When these fuel costs go up, they have a better competitive positioning relative to trucking. So yes, they're competitively quite advantageous.
Yeah.
Kevin, what you got?
By the way, I agree. I like the transports a lot, especially rails. Mine is ticker AEA. They have a very long name. Their name is Advance America Cash Advance Centers, and they specialize in payday cash advances. So it's a very interesting business model because, when times are tough, people are using these alternative finance centers. But I believe even when the economy starts to improve, it's going to take a while before people start going to regular banks and other types of more typical lending institutions. But again, the payday growth area has been increasing phenomenally in the last couple of years, and I see this trend continuing for quite some time. If you were to look at their financials, fantastic double-digit growth rates. The valuations look good. What's interesting, though, about them specifically is they are growing not only organically, but they're also growing by a lot of acquisitions, so they're growing by leaps and bounds. Looking at the chart, they are currently at $9. I'm looking at a near-term price target of $12. That is a 33% increase from here, like AEA.
All right. I'm going with National Oil Well Varco, symbol NOV. They've got strong margins. You might look at Baker Hughes or Schlumberger or Halliburton. Those stocks have been beaten down. And you say, well, why not buy one of those? I'm buying the strength of NOV, and that's because the street seems to like it better. Earnings momentum, strong margins, and CapEx in energy, is still trending higher. So you've got, their rig services and other petroleum services, just have them growing their business. So I want to buy it anywhere near $70, and I think it can go 80, 85 in the next 2 quarters here. All right, thanks for joining us, and we'll see you next week.